The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon, folks. I'm your guest host, Steve Rhodes, filling in for David White today. And it is a pleasure to be with you this afternoon on a Monday. What is it, July the 18th, I believe it is. So hopefully everybody had a great weekend. David couldn't be with us this morning or this afternoon, so I'm happy to sit in for him. Our call number here is 877-927-6648. You can always give us a call, folks, and you can watch this show live on Tiger TV. All you have to do is go to the homepage at TFNN.com, and you can pick this up on Tiger TV. You'll be able to take a look at my screens. Now, I kick things off for TFNN each morning at 9 o'clock, so I'm going to just kind of pick up maybe a little bit about where we left off. Now, right now, you've got the Dow down about 11 points. You've got the S&P's off 3.5. You've got the composite up 27. It's really the composite and the NDX 100 that is leading the charge on the way up, both up about a full percentage point. Russell 2000 up 0.3%, up 2 points. New York Stock Exchange, pretty flat, folks, up 4 points. Not even registering on the Richter scale. If we take a look at King Dollar up 25 cents, trading out at 82.22. You've got gold down 90 cents, not much activity out there. Trading out at 16.27. Silver's off 9 cents right now, trading out at 28.65. Light sweet crude down $1.13. Around the world here, you had the DAX finished up 18 points, 19 points, 0.3%. FTSE up 12 points, and then in Asia, everything was up. You had in Asia, everything finished off of its session highs. You had the Nikkei up 151 points, that was 1 7/10. You had the Shanghai up 0.4%, that was up 10, and the Hang Seng up 1%. Again, our call number 877-927-6648. Let's actually go take a look at the indexes out here and see where things may be headed to and what exactly is going on. So let's start off here with the SPYs. So we're going to, not the SPYs, we're going to go over, take a look at the cash S&P. When I kick things off in the morning, we're always taking a look at the futures contract, just simply taking a look at the activity before the market opens. So let's actually go take a look at the cash S&P. Now that we've been trading, you can see the S&P up and over the highs from Friday. Right now, you got the S&P trading out at 1345.94. What is the S&P doing? Now, a couple of things. One, I'm just going to go ahead and erase this stuff off of my screen, or some of the stuff off my screen. So what we're going to take a look at here, got a couple of different things to look at. One, let's just take a look at the retracement off of the highs in the S&P 500. So the highs you'd go back to would be April 2nd. And what you're looking at there is you're looking at, you had the SPYs up at 1422.38. And the low that was put in here last Monday, June the 4th, when it came down to 1266.74. What you can see if you're taking a look at my screen on Tiger TV, you can see we're up over the 0.382 level. When you're up over the 0.382 level, it says you absolutely can travel to sweet 618. In the S&P 500 cash, that would be in the 1363 range. Now, what else do you have up there? What are you going to run into before you get up there? First, what the SPYs are doing, the SPYs, I apologize. The S&P 500 is first running into the March 6th swing point. Now, you closed inside that on Friday. You're still, obviously, with it being a little bit higher today, you're above that area. So where's the next level of resistance? In the S&P 500, you take a look at the swing point low from April the 10th. So you're looking at the low of 1357. You'd also go ahead and take a look at the low from the swing point on April 23rd. That's at 1358.79. So you got 1357, 1358. You've got 1362 as the 0.618 area. And so that is where it looks like the S&P 500 is headed to. Now, what you're also going to take a look at, this chart here looks very similar to the DAX. If we go ahead and put up the DAX chart, you're going to see the same uptrend channel that began going back to the October 4th time frame. Now, when you're going ahead and you're drawing your channel lines, whether it's a downtrend, whether it's an uptrend, what you want to make sure that you're doing is you're connecting the co-located opens and closes of bodies. In this case here, you would go ahead and start with the open on October 4th on the S&P cash at the 1097 level. Your next area that you're going to hit is going to be that November 25th low or close on the S&P 500. That's at 1158.67. It's actually that next candle's body that you're going to hit as well. That's going to give you your three co-located opens and closes along the bottom. And then you're going to do the same thing along the top if you've got a trend tool or a channel tool on your charting software. Now, oftentimes when you break out of a channel, what will happen is a equity, a stock, an index will go back up and it'll test the bottom portion of that channel line. You can see here that the S&P cash has not done that. So what you could also take a look at, it's possible that even though it's setting up a tiger Gartley, what you're taking a look at is an A to B equals CD up that's completing. That A point being the low that came in last Monday, that's at that 1266.74. Your B point on this would actually be June 11th. When it gets up to 1335.52, pulls back really into the following trading session, June 12th, when it makes a low of 1306.62. Now, 1-to-1, well, that didn't work very well. Let me redraw this for you so you can actually see it on the screen. And if we take a look at the A to B equals CD on the S&P cash, a 1-to-1 takes you right up into that 1375 area. So that says it gets up and over that 0.618. Maybe it travels to 13. So the problem with the trend line or the channel line is you got to really ballpark it, and it depends on which day of the week as it's approaching that area. But right now, it looks to me like the S&P cash, unless it closes off today, and when I say closes off, means it would get back below the March 6 lows, which would be 1340.03, that it wants to travel up into that 0.618 area. That's on the S&P cash. Let's go take a look at what's going on inside the Dow right now. So we pull up the Dow. We're trading down 21 points at 12,746. The Dow has not been able to really do much. It's turned positive a few times during the trading session. The Dow also trying to make it up to the 0.618 area of its move down. Now, the move down there really is going to begin on May the 1st. When we take a look at the S&P, that was going back into the April time frame, but the swing point high in the Dow came on May 1st. That was at a price of 1338.66. Low put in at the same time, put in down there on June the 4th when it was trading out at 12,035. Now, if you happen to have watched my shows at 9 o'clock, there's a couple different candle formations that are out here. You may have heard of a Morningstar candle configuration. That is a 3-candle pattern. What I actually show here, and you see it every now and then. In fact, if we go back and take a look at the March 09 lows, you'll see this candle configuration. It's a 4-candle configuration. Not really a name for it. We can come up with a tiger name, any name that we want. Really, all that I want you to be aware of is when you have this large down thrust, this large wide-ranging bar on the way down. In this case here, we're talking about June 1st. You can see it's a wide-ranging bar. And then what you have here is basically two haramis, two small bodies. Yes, there was a price traveled, a little bit lower, but you just simply had two small bodies stalling out the price movement on the way down. And then what you had here is you had on June 6th where you had wide-ranging bar to the upside. A Morningstar reversal candle would have only had 3 bars, would have only had one of these small bodies here. You've got 2 of these bodies here, and oftentimes, and at that stage you couldn't find anybody to go bullish in the marketplace. It often creates a reversal. So it's a reversal pattern that is out there. What happens inside the Dow clearly gets above the 0.382 area. Right now, what it's also doing, if you take a look at what it is rejecting during the day today, is I go back to the February 3rd candle. Now, February 3rd, folks, is not a swing point at all. But do you recall what happened on February 3rd? Maybe you don't. That was the day that the numbers came out on a jobs report, and the market just simply took off from there and went up and achieved its highs, in this case here in the Dow, doing that on May the 1st. That area, that bottom of May 3rd, to me, is also a resistance area or a support area. In this case here, because the Dow is up and over it, it's really acting now as a support area. What else do you have in the Dow as a support area? You'd have the March 6 lows, the low out there being 12,734. You're trading just below that, the other area of support or resistance. And this is just simply going to be a little bit of a range. You'd be looking at the lows of April the 10th. So you'd be looking at 12,710.56. So what you can see is Friday, the Dow was a leader on the way up, both in volume and in price. In this case here today, it's up and over, but even though it's down 36 points right now, what it's really doing, if you take a look at it, it's really testing a support area. Kind of interesting out there. Now, let's go take a look at the NDX 100. Why? Because the NDX is up 0.7%, leading the charge on the way up. Why is it leading the charge on the way up? Well, you've got Apple trading out right now at $5.85. That's up $11 and change. So let's go take a look and see what the NDX 100 is doing out here. And the NDX 100 getting above the March 6 swing point. March 6, folks, was really even though it was a kind of a one-hit wonder, it was the first time that there was any kind of down thrust with volume on the March up from November the 25th or even the December time frame. Let's say the December 19th time frame. So that March 6 is just something that I like to benchmark. Now, what you see the NDX 100 doing today, it's taking on that March 6th area. The high inside the NDX is 25.93.64. You're trading, you've gone up above it, you've closed below it. And if you're a bull, what you'd like to see today, you'd like to see a close as we come into the 4 o'clock session. You would like to see a close above 25.93.64. Why do I say that? Well, when we go over to the Qs, we'll take a look at the volume over there. And what you're also seeing here is you're seeing that the NDX, which has been the leader, okay, was the leader on the way up, has been the weak link on the way down. One of the weak links. There's 2 weak links out there. You've got the small caps and you have the NDX. Now, if you take a look at my screen, I'm going to go ahead and get rid of some of the lines. Makes it a little bit easier for you to take a look at. What I want you to notice, there you go. Well, I want you to notice that I erased everything and I've got to redraw it. So all I'm going to do now is I'm just going to take my retracement tool from the highs that were out here on April 3rd in the NDX all the way down to the lows that were put in on the 4th of June? 4th of June. So now what you're seeing is you are seeing the NDX up and over that 0.382 area. That was 25.78.17. You get up and over that, says you might want to drift up to the 0.618. But let's watch. We'll watch as we come to the close, see if the NDX can close above the 25.93.64. That is the March 6 swing point. Just to finish things off before we go to a break here, we've done the S&P, we've done the Dow. Let's go take a look at the New York Stock Exchange. We don't need to look at the composite. Well, we can take a look at the Russell. But let's just take a look at the New York Stock Exchange, the NYA, often overlooked, but it shouldn't be, folks. The New York Stock Exchange actually down just a bit here, trading out right now at 76.54. So it's down about 10 points from the close of Friday. Now, what you can also see on the New York Stock Exchange, if you just simply, I'm going to just redraw this retracement. And I'm going to go from the highs in the New York Stock Exchange put out there on March 19th. You see, the New York Stock Exchange was the first one to actually give the signal that you were going to start to see a bullish leg or a bearish leg in the marketplace. The New York Stock Exchange made its highs on March 19th, folks. What you can see, New York Stock Exchange right now trading at that 0.382 area. That dead cat bounce. 877-927-6648. Got the Dow off 36 points right now. S&P's flat. We'll be right back, folks.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. I'm your guest host, Steve Rhodes, filling in for David while he is away for the day. And if we take a look at what's popping and what's dropping out there, you got Priceline leading the charge on the way up $14. That's up 2.2%. You got Intuitive Surgical, ISRG. They're up 2 6/10%, up $13. Apple right behind them, up $11. Chipotle, got that right. That's twice in a row. CMG is the ticker symbol out there. They're up $11. Apparently, you guys are eating lots of tacos and what else do they make there? They don't make too much. They're menued. Pretty amazing to me that they've got a stock like that. That is just shows you how popular Mexican food is. $413 a share for Chipotle. You've got Google trading up $7. If we take a look at what is dropping to the downside, one of these stocks here we took a look at this morning as it was opening. Body Central. They open a line. They operate a line of women's or teens stores in the Midwest, Southeast, and this is a broken stock, folks. This is a stock where there basically is nobody at the party. This is a real party pooper stock. Trading out right now at $8.20. You take a look at blowing a total gasket. This is one of those stocks where the expressway would be closed down in both directions, because right now you've had 13 million shares come out of this thing today, and it's trading out at right now at $8.19. the low of this stock, all-time low, $8.10. So there's not a lot of people in here. If you're in this stock, it has further to go to the downside, folks. So I would suggest moving out of that. You've also got DSW. We were looking at that this morning. Let's see what kind of volume has come out of this balloon here. DSW trading down 11%. Oh, yeah, it's got volume extraordinaire on the way down. DSW wants to go lower, though. Let's go ahead and we take a look at the ABCD down. And what we did see on this stock is I believe we saw a little bit of support, which was coming in. Now we haven't really seen any support. This thing wants to take a look at the volume so far today. 4 million shares on the way down. Of course, this thing gapped up. Gapped up, looked pretty good. Made a high, but with 2 million shares. You want to talk about taking out B points. Well, it certainly has done that and then some. If we put this on a weekly chart here, if you're in this stock, folks, absolutely get out of Dodge right now. Because in one trading session, it is going to, it's hard to say where this thing is going to get back at least to $42.29. You're at $52 right now. Who would want to take that type of heat? Another 20%. And who knows whether or not that's really where this thing is going to stop. That is on DSW. Got Williams Clayton off 8%. CWEI. Let's go take a look at that stock, see what it is doing. CWEI. If I can type, there we go. So you can see, okay, doesn't look to be, at least just on that small little screen, doesn't look to be too bad. Of course, if we take a look at, okay, I need to make sure I put the right chart up there. CWEI, okay, I'm just going to blow it up on the screen here. That's what we're looking at. Of course, this thing has been in one heck of a downtrend ever since it made a high on February 27th, made a high with 100,000 shares. Today, you are down with 100,000 shares. So not exactly the most liquid of stocks. This thing, however, headed down all the way into that October 4th level. One at a time, they head to October 4th. Now, let's go take a look at those stocks that are popping. Let's go take a look at Chipotle. Let's go see what it is that they're selling out there other than some guacamole and chips. So you've got CMG. And this thing here, now what CMG, folks, if you take a look at it, it does have some volume off of the top. So there was absolutely some institutional selling on April the 20th. Came down with 2 million shares. That was after making a high just about 5 trading sessions ago with 948,000 shares. That's the biggest volume that this has had on the way down. The next time that it had any kind of volume was down on May 22nd, 1 million shares. Right now, today, just to give you kind of a feel, this thing, take a look at Friday's session. Friday's session, right, you had to mark it up, and on Chipotle, 801,000 shares. Today, this thing is up, a total of almost 3%, 400,000 shares. Half the volume of what it did on Friday on the way up. That's after really coming down with 500,000 shares on June 7th. That 500,000, that's what it's really going into right now. And so that says that Chipotle wants to get up to 417.90 as one of its spots, where I think it really, what you want to start paying attention to as a potentially as a short candidate, I'll say, on Chipotle. I would say you'd be paying attention to that April 20th downdraft day. The low there of 416.01, the high of 433.30. 877-927-6648. Dow off 23 points. S&P up 2. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. I'm your guest host, Steve Rhodes, filling in for David White while he is off this afternoon. Even though he wishes he could be here, he's here in spirit. Now, we got the Dow off 30 points. Let's take a quick look at some of the currencies out there. Then we'll go take a look at some of the sectors, see how the S&P is doing it, up a full point. Woohoo! If we take a look at the Great British Pound now, you know, Friday you had a heck of a move in the marketplace here, and that was fueled by a weaker dollar. That means that what it was fueled by was a stronger pound, a stronger euro, and a stronger yen. You had all three of those working at the same time. And if we take a look at what you really did today here, you did that in the intraday session. You did that early last evening. On the daily chart, you made a 1-to-1 A to B equals CD up. Now, the 8-point, and folks, what you want to understand about these A, B, C, D patterns, no matter what you trade, doesn't really matter what chart it is on the screen. Even though you're now a forex trader. If you trade A to B equals CD patterns, if you learn how to buy and sell the D point, then right now you're a forex trader. In fact, this is, in my opinion, this is the pattern. This is the pattern that you want to be able to learn how to trade, because the markets, no matter what they are, no matter what chart you put on the screen, you're going to see A to B equals CD patterns out there. In this case here, the pound starts off with the A point being down at June 1st, the low out there at 152.67. The B point as it was making a high into June 7th when it gets up to 156. Then it goes ahead and pulls back for one trading session. We can take a look at that retracement level, but it pulls back down to the 154.03 area. 1-to-1, A to B equals CD, says that the pound should get up to 157.37. Where's the pound actually get up to? 157.40. 3 ticks, folks. Do you know how hard that is to do on a currency? That's pretty good. Maybe if I explode this up enough, we'll actually see that the AB equals CD. It does it right to the penny. And what do you have today? You've got the pound trading down. Now, it makes sense here. So you have to take a look at, when you take a look at any chart, what you're going to see is you're going to see a normal bounce to that 0.382 level. When you get to that 0.382 level, in this case here in the pound, you're starting all the way up at the highs coming into April 30th, 2012 on the daily chart. You're up at the 163 level. That's when it makes a move all the way down to the 152-ish level there. So when you take a look at this, you can see you're trading right now at the 0.382 level after making an A to B equals CD pattern. You're normally going to let people off of the elevator. That's exactly what is going on inside the pound. I would expect that it would pull back a little bit more. When you take a look at today's weakness inside the pound, today's weakness, absolutely weakness inside the euro. Let's take a look at the euro here. It is amazing that the market is where it is with the destruction that is going on inside the euro, especially after everything was fixed over in Europe. If we take a look at the euro-US dollar currency pair, trading out close to its session lows, not all the way down there. In fact, let me just put the 30-minute chart up here. It's going to be easier for you to be able to see intraday just exactly what happened here with the euro. Let me get rid of one of the ABCD patterns that is out there. The euro right now trying to make a 1 to 2.618, A to B equals CD down. Now, last night it opens up, pops up, gaps up, gets up to a price point of 127.461. Actually, let's redraw this. I can see this kind of came off kilter here. So we're going to redraw our A to B equals CD on the 30-minute chart on the euro. And what we're going to see here is the euro is trying to make a 1 to 2.618, A to B equals CD. The entire way down here, as it has achieved each of these levels. When I say each of these levels, when you take a look at this D point here, D point can be several different levels. So when I say A to B equals C to D, folks, a 100% A to B equals CD on the euro would have stopped at the 126 area. That would have made sense. Of course, you had this wide-ranging bar on the way down. Why do I say that would have made sense? Because you were just simply coming back into Friday's close. But when you're coming down with that wide-ranging bar, that is like a, it is one of the largest signals. I'll just put it to you like this. When you're making a D point and you're coming into it with a wide-ranging bar, it's absolutely blaring out to you that it is going to seek lower price. That's exactly what happened here. You really had no bullish candles. Yes, you see a few green candles there, but none of those candles are any significant bullish candle whatsoever. You didn't even have a bullish engulfing right here when it had that chance coming in at 10 o'clock this morning. Missed it by 1 pip out there. And so you had no bullish candles. Doesn't like that level of 1.618. What's that say? It's going to go down to the 2.0 level. Now you're trading below that. Where's it going to go? Well, certainly not before 4 o'clock, but in the overnight hours, you're going to see the euro get down to that 2.618 level. Can it go further? Absolutely. Where's the next level? I'm glad you asked me that question. Next level is pi. So it's going to maybe go have some good old pie. I don't think it wants good old USA apple pie, but pie here would take the euro down to, got to put it 3.415, something like that, and then on and on and on. I should probably have that memorized. But if we go take a look at what that next level is on the euro, there we go, make it a big red dot. Well, we got to put the dollar sign in there. You want to know what that is? And so what we're looking at is 124. Looks like about 124.9 or 124,892. So if it doesn't, if it takes out the 2.618, A to B equals CD, it'll go down to that pi level. What's down at that pi level gets all the way back to the June 12th lows that the euro was putting in. Let's go switch over. Let's take a look at the ETFs. We've got 20 minutes to go until the end of the trading session. So let's go take a look at the ETFs, see what kind of volume we've got out here. So I've got the 4 quadrants. If you're looking at my screen, you're seeing the diamonds in the upper left, the SPYs in the upper right. You're seeing the small caps, the IWM in the lower left, and the Qs in the lower right. So if we take a look at what's leading things up, that's probably where we ought to start, right? We'll start with the Qs. And the Qs are running into that March 6th swing point. Now, the March 6th swing point high happens to be $63.72. Let's see, what did it get up to today? $63.74. Ooh, interesting. Topped it by 2 pennies. What kind of volume do you have out there on March 6th as was making a little downdraft? 54 million. What do you have as it's moving up towards its highs today? 27 million. Did you hear me, folks? 27 million shares is taking on a downdraft of 54 million. Now, I am not a mathematician, but I'm pretty good enough to know that that's 50% lighter volume as it's moving up. Even if you go take a look at let's see, if you just take a look at last Monday's downdraft, last Monday when they had solved all of the problems over in Greece as well, I believe, or maybe it was Spain. That's right, it was Spain. One Monday it's Spain, the next it's Greece. What's it going to be next Monday? Maybe it's going to be Italy. We're just going to keep it all over in Europe, that's for sure. But if you take a look at last Monday's Spain fix-it, you had 50 million shares in that downdraft, that 50 million. So you're going against 28 million right now against that 50 million. You may have a little bit of rejection, especially coming into a new moon Monday, or Tuesday, I should say. You got a new moon coming in tomorrow. Today happens to be a 3P index date out there. So that's on the Qs. That's the strength. You just took a look, folks, at the strength behind this move in the market today. How do you like that for conviction? Okay, well, I don't like that much for conviction. Let's go take a look at what is the strength in them. Well, that was the strength. Let's go take a look at the weakness. Let's go take a look at the diamonds. Let's go see what the Dow diamonds are doing. The Dow diamonds taking on that March 6th area. Now, take a look at the volume on March 6th, folks. It's so high that I have to put my red line, down a little bit lower than the actual top of it. The actual volume was 14.4 million shares. Now, you have another downdraft. If you don't like March 6th, how about you take a look at the downdraft from April the 10th? That's got 13 million shares. Oh, if you don't like that, how about if you take a look at the... well, let's see. What do you want to take a look at? Let's just do the easy one. Let's take a look at last Monday, June 11th, when it did 7.2 million shares. So what is it that you're doing today inside the diamonds? 4.2 million. Going against Friday. Friday had 6.2 million shares. So it tests that, closing below that, closing below right now. Let's see. The low of the swing point on April 10th happens to be 126.92. You're a little bit over that. But if you take a look at March 6th, where you've got real volume out there, the low there, 127.18. You're trading at 127.13. The bullish case, you want to see it get inside, even if it's on lighter volume. You want to see it close today above 127.18. Bearish side, you want to see it close below 127.18. Pretty easy. How about that for conviction behind today's move in the marketplace? Not out there, but pretty resilient considering the strength in King Dollar, the pullback in the euro, pullback in the pound, and the pullback in the yen out there. Let's go take a look at the SPYs, see what the SPYs are doing, then we'll round it out and take a look at the small caps. The SPYs also doing the same thing, coming up against that March 6th downdraft. 201 million shares on March 6th. What are you doing today? Yep, 109 million shares. 109 going against 201. Okay, so maybe it's what? Maybe it's going to be 40% light on volume. Look at the volume from last week on Friday, 169 million shares. Today, 109 million shares. You're going against the downdraft from last Monday, 169 million shares. Yes, it can move higher with volume, folks, but have your stops in place if you are playing this to the upside. Absolutely have your stops in place here because you do not have, well, let's just say this. You don't have any institutional buying going on in the marketplace. Now let's go take a look at the small caps. What are the small caps, the IWM, doing? You know what the institutions are doing, right? They got their guns loaded. They're getting ready to shoot a few bullets. Just doesn't look like they're going to shoot any bullets to the upside. Now, the small caps can't even get going. This is the little engine that just simply can't. The small caps can't even get above last Monday. Of course, that downdraft of 52 million shares today. At least there's a reasonableness with regard to volume. You've got 40 million shares right now going against last Monday with 53 million shares, going against 57 million shares from June the 7th. Of course, when you get up into that March 6th area, 80 million shares. So where is the weak link out there? Certainly right now you'd have to say it is with the small caps, the IWM. And when you take a look at the strength behind the U.S. dollar index right now, you can see trading out at 82.22, getting back inside the top half of its range. That gets above the January 13th area. So let's go take a spin over in the sectors of the S&P. Let's go take a look at the XLK, the number one leading sector out there. That is the technology sector. XLK doing the same thing, coming into that March 6th swing point. You want to use that March 6th swing point as one of your areas, your line of demarcation. What are you doing in the XLK? 14 million shares, the high out there, 28.60. Where is the XLK trading right now? 28.58. You got 14 million shares. Of course, today, with the nice move up in the index, it should have plenty of volume, shouldn't it? And it does. It's got 6.3 million shares. 6.3, folks, going against 14 million on the way down, going against Monday, which had 13, I rounded up, 13.6 million shares. The high of Monday, 28.58. You are trading at 28.58 right now. So it'll be interesting as we come into the last 13 minutes here to see, in fact, where these ETFs close. Yes, it is above the 0.382 area. That does say that it has a setup that it could run up to 29.25. In fact, what this is setting up, the B point on the A to B equals CD happens to be last Monday. So we know it's not going to have the volume today to take that out. It can drift up into that 0.618 area. If we're going to take a look at and it's got an island reversal. So you got an island reversal out here. So it does, that is a bullish configuration, no doubt about it, but it does not have the institutional buying behind it. Summer or no summer. Where could this go to? Well, just the 1-to-1 A to B equals CD takes you up inside the downdraft gap that you've got on May the 4th out there. That would complete a 0.618. That's $29.37 area. The actual high of the downdraft on May 4th is $29.06. Let's go take a look at the financials out there. XLF, of course, in the financials, even though they have reshuffled it, put a bunch of property companies in there, Simon Group, a number of other REITs out there, even with the strength that they put inside the XLF, consider this. It's going against that March 6th area. Hasn't actually hit the bottom of March 6th. The low there would be 1440, 93 million shares on that downdraft. Today, on its move up, 52 million. 52 going against that magic number of 93 million shares. What on Friday did you do? You did 84 million shares on Friday. Today, again, 52. You want to talk about lack of conviction on the way up, coming into New Moon Tuesday? I say be careful out there, folks. Be careful, Will Robinson. If you take a look at the downdraft on June 11th, the high of 1433, you're trading below that. That's 103 million shares out there. If we take a look at the retracement off of the high in the XLF going back to March 27th, just like when we were taking a look at the New York Stock Exchange, what you will also see is you are right at that 0.382 level. Let's go take a look at some of the other sectors out there. Let's go take a look at the utility sector. You know, clearly A to B equals CD up is in process here. Defensive play, no doubt. You take a look at the B point. B point here actually crossed with volume. That B point, folks, goes back to May 11th. Had 3 million shares when it got crossed with 9 million shares. That's the type of A to B equals CD you want to see out there. 877-927-6648. Dow down 20 points. We'll be right back, folks.
Has the current market volatility continued continue to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. 877-927-6648. Let's look at what looks like is going to be the trade of the quarter. We're taking a look at natural gas here, clearly up off of the bottom, came up off of the bottom with conviction last week on Thursday. You talk about wide price spread. You talk about, it has it all. And if we take a look at the natural gas contract, right now trading out at $2.64. Looks like this wants to head to the $3.02 level. Now, most folks are trading this now. You're already inside the swing point high being May 18th. So if you're inside, most people trade this off of the UNG. And this is why it's very important to be, you can't just base all of your information based on the UNG. This is the underlying instrument that is out there. So if we take a look at the UNG, though, I've got them side by side here. What you can see right now with natural gas, you can see it's already inside the swing point going back to May 18th. If we take a look at that same swing point up here on UNG, you're not all the way up there yet. So you're going to have to be paying attention to what's going on inside natural gas. If you get let's say tomorrow, moves higher, rejects the swing point on lighter volume, and the volume that we're talking about there at that swing point, 192,000 contracts, it sets up a pullback. I hope that it sets up a pullback and sets up a trade, because this looks like a good trade here, a good summertime trade that is on natural gas. Right now, what does it set up as a possibility? The same 1 A to B equals CD gets you to $20.67, but very hard, in my opinion, to gauge the UNG without paying attention to the natural gas contract. You want to do the same if you're trading gold, silver, oil. You want to understand what the underlying instrument is out there. It's going to be much easier for you to be able to trade. If we take a look at just a quick spin around the world here, you got the Hang Seng. You can see this thing trading now towards, you had a nice gap up yesterday, but went ahead and closed near its session lows. If we take a look at the DAX, see what the DAX did. It was up about 18 points yesterday, or this morning, I should say. And if we take a look at the DAX, you can see well off its session highs as well. So in Germany, they were not exactly celebrating like they had put out the fire over in Greece. Of course, this was, as we started off the show today, we were taking a look at our S&P cash, and we're showing the same type of trend line in the S&P cash that you have here in the DAX. So the DAX is trying to get up to the bottom of this trend line channel. Exactly where that's going to be, probably in the 6,400 area. I would say it's going to be somewhere around 63.92 would be a pretty good target for where the DAX wants to try to get into. Let's go take a look at the ETFs here as we are closing out the show here. Let's go ahead and put this on the 10-minute chart. Normally, this time of the day, you would start to see some big volume flowing in here. And with 3 minutes to go in the trading session, so far, the volume hasn't shown up. Hasn't shown up today at all, folks. So you do have prices, especially in the NDX, moving higher. But as we saw when we took a look at the Qs out there, no volume at all. Let's take a look at the Qs, see exactly where we're at right now, price-wise, because that was coming in to that March 16th swing point, March 6th swing point. Doesn't look like it's going to take it out at all. You did not, now, from a bullish standpoint, at least you did not close below it. Below it by meaning 63.23. But again, that's 54 million shares, March 6th. So far today, 30.7 million. Stay tuned, folks. Thanks for being here. I look forward to it. You can catch my show every Monday through Friday, 9 a.m. Tune in here at TFNN.com. Stay tuned. The Tom O'Brien Show will be up next. Take care, folks.